So, Taylor, we just talked about how confirmation bias can lead investors to double down on tech stocks even when the market signals caution. Another cognitive bias that can really trip us up, especially in large purchases like real estate, is anchoring. Imagine you're looking to buy your first house. You find a place you love, and the asking price is $500,000. That number sticks in your mind, becomes your anchor. Even if comparable properties in the area are selling for significantly less, or if the house needs repairs that justify a lower offer, that initial $500,000 can make it hard to negotiate objectively. This scenario is precisely what one of our listeners wrote in about. They're struggling to shake the initial asking price, even though they know deep down it's likely inflated. Sam, can you help us understand what's happening here? How does this anchoring bias, this getting stuck on a specific number, influence our perception of value, not just in real estate, but in other investments too?
Anchoring bias is a powerful cognitive shortcut our brains use to simplify decision-making. We latch onto an initial piece of information, the anchor, and use it as a reference point for all subsequent judgments. In real estate, it's the asking price. In stocks, it might be the price you first bought the stock at or a previous high. This affects our perception of value because we tend to judge everything relative to that anchor, even if the anchor is arbitrary or irrelevant.
So, if I understand correctly, even if I know a stock's intrinsic value is higher than its current price, if I initially bought it at a much lower price, I might be hesitant to buy more because I'm anchored to that initial price.
Exactly. You might think it's too expensive now, even if logically it's undervalued.
So, how do we break free from this anchor? What techniques can investors use to make more rational decisions?
Awareness is the first step. Recognizing that anchoring bias exists and can influence your thinking is crucial. Then, try to actively seek out different perspectives. In real estate, get independent appraisals. With stocks, research different valuation models and compare the current price to the intrinsic value.
This reminds me of what we discussed about confirmation bias. We need to actively look for information that challenges our initial assumptions, right?
Absolutely. Diversifying your information sources is key. Don't just rely on what the seller or the company is telling you. Look at comparable properties, competitor performance, industry trends.
Another effective technique is to deliberately consider the opposite. If you think a house is worth $450,000 based on the asking price of $500,000, force yourself to consider why it might be worth only $400,000 or even less. What factors could justify a lower price? This helps you break free from the anchor and consider a wider range of possibilities.
So to recap, anchoring bias can significantly influence our investment decisions, making us overvalue or undervalue assets based on an initial piece of information. To combat this, we need to be aware of the bias, seek out diverse perspectives, and actively consider opposing viewpoints. If you're considering a major purchase like real estate, remember the importance of thorough due diligence. Get independent appraisals, compare prices with similar properties, and don't be afraid to walk away if the numbers don't add up.